Welcome back to the channel, everyone. Today I want to talk about the massive buy signal for AMC. I've also got an update from Adam Aaron and much, much more. So stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 3,800 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, it looks like AMC worked something out with WWE, showing SummerSlam at one of the dine-ins near me. As you can see, it looks like the AMC dine-in in Menlo Park is going to be showing WWE's SummerSlam. That means not only has Adam Aaron stuck to his word, but he's also came through with other sports like WWE and not just kept it solely to UFC. Back in July, Adam Aaron tweeted saying many suggestions from you all. We indeed will talk to all major US pro sports leagues, as well as some US college football, the Premier League, FIFA World Cup, UFC, and boxing, but it's very difficult and possibly prohibitively expensive to secure theatrical rights. We will try. So it looks like Adam Aaron and the team have also been going after WWE, and it was a great success. Hopefully Adam Aaron can keep up the pressure and can hopefully show some Premier League games or some US pro sports or US college football in AMC cinemas or theatres as well. On top of that, on August 7th, last week, AMC showed their second UFC fight. The first one was such a success, we're doing it again. On August 7th, at about 100 AMC theatres in the United States, on our big screens across the country, another UFC matchup. I think this is a great route to diversify into because it's going to bring a new genre of people to AMC theatres. The average age of a cinema goer is between 18 and 25 years old. If Adam Aaron continues to show major sporting events, it could also bring people older than that and younger than that, people of all generations really, to the AMC theatres. Now let's also talk about the massive bullish indicator for AMC. Do you all see that MACD reversal? Investopedia defines MACD, or Moving Average Convergence Divergence, as a trend following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-period exponential moving average from the 12-period EMA. The result of that calculation is the MACD line. A 9-day EMA of the MACD, called the signal line, is then plotted on top of the MACD line, which can function as a trigger for buy and sell signals. If we go back to the AMC chart, this is the MACD line down here. As you can see at the beginning of the year it was red and then flipped green and then again flipped back red and has now just flipped back into the green. If we look back in May when AMC flipped from red to green, this was one day before the big push up when we broke through $14 and $15. Hopefully this shows that on Monday we should see a continuation of this green move up to around the $38 mark and potentially through that. I know that you can't really apply technical analysis or even fundamental analysis to AMC at the moment as it's a squeeze play and it's very heavily manipulated, but hopefully this is the bullish indicator that sets off the next run up and the next gamma squeeze. If we look back at the AMC chart, after that break of $14 and $15, we then had 9 trading days before the gamma squeeze really got started. If Monday is that run up, 9 trading days after puts us around the 26th or the 27th of August, just towards the end of the month, when those new margin requirements are going to kick in. If over the next 2 weeks AMC can claw its way back to $40 and $50, I think that will put us in an excellent position for the new margin requirements to come in and could potentially set off the AMC squeeze. But I don't want to get your hopes up and I don't want to set any specific dates or any specific price targets. Just know that this is one of many catalysts that could potentially set off the AMC squeeze. Something else that is very much on our side at the moment is the Ortex data. As you can see, the estimated short interest percent of free float is currently at a whopping 19%. That is the highest that the AMC short interest has ever been on a legal standpoint. There's also a whopping 111 million shares on loan, which I also think is the highest number of shares on loan that AMC has also had, again from a legal standpoint. That utilisation rate of 92% is also looking good, and hopefully again over the next 2 weeks that can push its way back up towards 96 and 98%, getting very very close to 100% utilised. I also want to talk about the current macro scale indicators that are doing a madness. The reverse repo, the Shiller ratio, and inflation data. All of our macro scale indicators are pointing towards a bear run or market crash. Reverse repo was above $1 trillion 3 times this week, ending the week on $1.05 trillion. This shows a huge, unprecedented amount of risk in the stock market at the moment. Inflation was also above 5% for the third month running. Last time that happened was in 2008, just before the housing market collapse. I think these are two very, very key points, as it shows that the US economy is currently not in a great position, which could cause that wider market event, which triggers the AMC squeeze. So let's also talk about the Shiller ratio. While it's not new, it's doing the rounds again. The Shiller ratio compares the price of a stock to its earnings, adjusted for inflation. And this Shiller PE ratio and the graph that this post is talking about is the Shiller PE ratio for the entire of the S&P 500, all added and averaged together. The higher this ratio is, currently the ratio is sitting at 38, normal is 15, and the all-time high is 44. The higher the ratio is, generally the more unstable the market is, because it means that there is more money in the market speculatively. We've passed the peaks of Black Tuesday, Black Monday, and the housing crash. Our only peak to pass is the dot-com bubble, but we are getting close to it as well. If we have a look at that Shiller PE ratio graph, which tracks the PE ratio for the entire of the S&P 500, we can see that the ratio peaked here at Black Tuesday, came back down, peaked again due to the Roosevelt recession, came back down, peaked again at the recession of 1960 to 1961, came back down again, had a small peak on Black Monday, and again a massive all-time high during the dot-com bubble. Again, we had a small peak here back in the 2008 recession, came back down again, and here we are right now at 38.81, very close to the all-time high and above every other single peak we've ever had. This is a very concerning ratio because it basically shows that the S&P 500 is currently very overvalued, as the stock prices of these companies in the S&P 500 is substantially higher than their earnings. I won't go into great detail here, but keep your eyes peeled though. I have a macro scale indicator due diligence guide in the works. Two things I'll say now is this. Firstly, though macro scale indicators don't directly relate to GameStop and AMC, they do correlate. So the market crashing will cause both AMC and GameStop to soar. Secondly, no one indicator should be looked at in isolation. Only when grouped together do they paint a more meaningful picture. Again, I don't even think that when grouped together they can be 100% relied on. They're not guaranteed to cause the AMC squeeze, they are just a major catalyst that could cause the wider market event, which also could cause the AMC and GameStop squeeze. Again, not 100% guaranteed because I don't want to get anyone's hopes up. I also wanted to dispel a bit of FUD going around at the moment. You may have seen this tweet here from Charles Gasparino. It says, "Scoop, in a huge win for Robinhood and a big setback for Gary Gensler and the AMC apes, the US House Committee of Financial Services quietly shelves plans to ban payment for order flow, opts to study the issue after Robinhood lobbies." Charles went on to speak about this on Fox Business and heavily referenced this article here from Seeking Alpha that says Robinhood gains on report, Democrats dropping the plan to ban payment for order flow. This all relates to HR 4617 to require the SEC to carry out a study on payment for order flow. The bill was introduced on July the 22nd and it was considered by the House Committee on Financial Services on the 28th of July, and they decided and recommended that the bill be considered further. Therefore, we knew as far back as July the 29th that they weren't immediately passing this bill into law and they wanted a full report written up to consider the issue further. In no way have they quietly shelved plans to ban payment for order flow because we already knew as far back as the 28th, 29th of July that they wanted to study it further. Therefore, this tweet and this Seeking Alpha article are definitely FUD and should be ignored. I actually wouldn't have even found this article if it wasn't for my new partner, Moomoo. Moomoo are an excellent trading service with super up-to-date news. They also have an earnings calendar, the option order flow, and much, much more. So if you do want to sign up with Moomoo and get super up-to-date news, be sure to use my link in the description below to get 4 free shares worth up to $3,350. And if you're in the UK, be sure to sign up with Freetrade again to get some free shares linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!